The SEC continues to wage its war on crypto as it has sued yet another crypto exchange for offering an unregistered securities trading platform. And with this lawsuit, the SEC has now attempted to drag down 6 altcoins, naming them token securities. Now, this does also pose a major risk to both CRO and BNB token, which we are going to break down near the tail end of this video. Crypto exchange Bittrex announced back on March 31st that they were going to shut down their US business amid regulatory uncertainty and an unwillingness by lawmakers to embrace innovation. While Bittrex Global will continue to operate, the US arm Bittrex US is set to close on April 30th. Customer funds are safe and can be withdrawn until then, according to the Bittrex CEO. He says the sad reality is that while policymakers and regulators in jurisdictions around the world work with digital asset exchanges on shaping the future of the global economy, their US counterparts are seemingly committed to extinguishing the industry and sending it overseas. So Bittrex, just a couple of weeks after announcing that they were deciding to leave the US, were in fact hit with this SEC lawsuit. And I do think it is very important to understand the basis of this lawsuit to understand how the SEC is using these crypto exchanges to attack the altcoin market. So the SEC claimed that the exchange operated as an unregistered securities exchange, broker, and clearing agency. And Gary Gensler, the SEC chairman, countered that there has been enough regulatory clarity around the crypto and exchange space for businesses to operate within the law. Today's action yet again makes plain that the crypto markets suffer from a lack of regulatory compliance, not a lack of regulatory clarity. Bittrex, as alleged, failed to register and comply with U.S. securities laws as an exchange, broker, dealer, and clearing agency. U.S. Bittrex customers have until April 24th to facilitate fiat withdrawals via wire transfer and until April 27th to withdraw via ACH. And if users miss the above deadlines to pull funds off the platform, remaining assets may be unavailable for an extended period of time, according to Bittrex. Now that we understand they are accusing Bittrex of offering an unregistered securities exchange, we can understand how they are using this to go ahead and attack the altcoin market, as they have said that 6 altcoins being traded on Bittrex were in fact securities that were listed on the platform. The SEC's complaint lists Dash, Algo, OMG, TKN, NGC, and IHT as unregistered securities. The agency alleges that token investors had a reasonable expectation of profits, meaning the assets should be considered securities under U.S. law. The SEC states that Bittrex coordinated with token issuers who sought to have their crypto asset listed on the exchange to first delete from public channels certain problematic statements that the CEO believed would lead a regulator, such as the SEC, to investigate the crypto asset as the offering of a security. Dash investors in particular were operating under the assumption that the growth and development of the Dash blockchain would increase the value of the tokens, the SEC said. The ALGORAND blockchain team followed a similar strategy by boosting the token and promising growth opportunities to holders, alleging the SEC. In other words, in promoting the Algo token sale, the ALGORAND Foundation tied the potential growth of the ALGORAND blockchain to potential demand for its token and to its own commitment to preserving a price floor for Algo. At the time of this recording, we can see that both Dash and ALGORAND, who were specifically mentioned by the SEC in this lawsuit, are down 5.61% and 5.18% respectively. Now, I do find the mention of Algorand specifically very interesting, as there are some old clips of Gary Gensler surfacing from 2019 in which he was singing the praises of Algorand. So we're going to listen to this 29-second clip of Gary Gensler shilling Algorand, only today to turn around and call it an unregistered security in the eyes of U.S. law.
Governance is tough. You could create Uber or Lyft on top of a blockchain technology today. Well, maybe in 5 years you could. It would have the performance. Sylvia McCally's Algorand, who's a Turing Award winner at MIT that I work with. Sylvia's got a great technology that has the performance. You could create Uber on top of it. The question is then, who would update the software?
So we can clearly see that Gary Gensler went from singing the praises of the Algorand underlying technology and their CEO to now calling Algorand's token an unregistered security in present date. And I think it's safe to assume that if Gary Gensler can flip his opinion on an altcoin, that other altcoins falling under the same umbrella, which have already been attacked by the SEC, are at risk of future securities laws. And this leads me into the next portion of this video, as I do see a potential underlying risk to both CROcoin and BNB token. And this really all begins with the basis that was set by the SEC back in December of last year, in which they did go ahead and call the FTT exchange token a security. So FTX's exchange token FTT was sold as an investment contract and thus is a security according to the SEC. And this is a direct quote, which is very important to understand how I believe they may try to attack a lot of exchange tokens in the future. So they say here, if demand for trading on the FTX platform increased, demand for the FTT token could increase, such that any price increase in FTT would benefit holders of the token equally and in direct proportion to their holdings. The large allocation of tokens to FTX incentivized the management team to take steps to attract more users onto the trading platform and therefore increase demand for and increase the trading price of the FTT token. They do also specifically mention FTT's buy and burn program, comparing it to a stock buyback where revenue from FTX would repurchase and burn FTT, thus increasing its value. And both the quote and this buy and burn program are two things I do want you to keep in mind as we move forward and discuss this, because I think that the SEC could attempt to attack both CROcoin and the BNB token from a very similar angle. So for starters, we know that Crypto.com has more than 80 million users. They are a leader in regulatory compliance and security certifications, as well as having a lot of insurance coverage and a verified proof of reserves. However, Coinbase is also incredibly compliant in the US. They are a publicly traded company that the SEC had to approve to go public, and they are still being sued by the SEC. So I don't think that it is safe to assume Crypto.com is safe, even though they are incredibly compliant and do have a lot of regulation and security certifications. And there are incentives to actually hold CROcoin via the Crypto.com app, mainly here being the Crypto.com Visa program, in which you are effectively incentivized to buy a certain amount of CRO and lock it up for the Visa. And after a 6-month period, which you are forced to lock in your CRO, if you do attempt to unlock your CRO, you can do so, but you are effectively going to lose all benefits the Visa does have to offer and see a very big cutback on the cashback rewards. I also find it very interesting that on March 15th of last year, it was announced that Crypto.com began their exchange rollout for select institutional investors in the US. And a big reason I believe this has not yet launched in the States is because the exchange does in fact offer the ability to stake your CRO. Once again, they change the terminology to lock up instead of stake, but the basis of this product remains the same, where you are being incentivized to lock up your CRO on the exchange for in-app benefits. So you can see here that by locking up 50 to 100,000 CRO, Crypto.com is offering you a 4% APR and 0 fees on your maker fees for trading. Then from 100,000 CRO to 500,000 CRO, once again, 4% APR and a 0.01 basis point rebate on your maker fees. And for 500,000 CRO plus, a 0.02% basis point rebate on the maker fees and an 8% APR. So Crypto.com offering a product on the exchange incentivizing you to lock up CRO for reduced trading rebates and a little bit of a yield sounds a lot like the yield-bearing interest programs the SEC has been attacking in the US, such as Kraken. And in terms of the auto burn or the buy and burn FTT mechanism that the SEC did target, it's also worth noting that Crypto.com burned 70 billion CRO tokens before the Crypto.org chain launch, which did lead to a significant increase in the price, which the SEC can accuse Crypto.com of doing intentionally to inflate the value of their token. And in terms of the BNB token here, it says right on Binance's website that you can use BNB to pay for goods and services, settle transaction fees on the Binance Smart Chain, and participate in exclusive token sales and more, as well as being offered a 25% reduction on spot trading fees, 25% on margin trading fees, and 10% on future trading fees. Once again, BNB incentivizing you to actually have their BNB token to get some increased or rather decreased trading fees within their app, which does show a direct link between the amount of people using Binance and the actual use case for the BNB token. Hypothetically, the more people using Binance, the more people may want to hold on to BNB for these reduced fees. And if we scroll down here on the website, once again, very similarly to FTT's buy and burn program, BNB uses an auto burn system, which they are aiming to reduce the supply from 200 million down to 100 million BNB. Now, this is not a buy and burn, just like CRO is not a buy and burn, but the basis here remains the same. There is a company overseeing the token that is taking steps to effectively reduce the supply of said token to increase the value of all of the tokens that are left in the float. I definitely think the SEC could attempt to attack both CROcoin and BNB from the angle of both being exchange tokens, in which you can see there is some sort of a connection between the exchange and the underlying native token, as well as a team that is overseeing the burns and the tokenomics of these projects. And before we wrap things up, I do need to address that there is one inherent difference between FTT and CROcoin as well as BNB, and that is the fact that the FTT token was only an exchange token for the FTX platform, while the BNB token powers the Binance Smart Chain and CROcoin powers the Cronos chain as well as the Crypto.org chain. And in this respect, it is worth noting that SEC Chairman Gary Gensler once again is also attacking proof of stake tokens like Ethereum, any coin being promoted by creators and offering returns, whether it be through a staking yield or price appreciation. So that is pretty much all we got for today's content. I do still remain bullish on both BNB and CROcoin regardless, but did just want to highlight some of the risks that they could potentially face in the US. I don't think this will hinder them in terms of their global adoption, but if you are a US citizen, this is definitely something you do want to be aware of. And on that note, I hope you did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing day, and I hope to catch you in the next one. Peace out for now.